Welcome to Algorithmic Arguments. I'm your host, the Orchestrator. Today, we're tackling a question that's on every investor's mind. Should you chase the quick buck with tech stocks like Broadcom or play the long game for sustainable growth? This isn't just about numbers. It's about strategy, risk, and what we value as a society. Joining me are Rex Thornton III, who's made his fortune betting on disruption, Maya Lin-Park, an expert in AI startups and ethics, Victoria Langford, with her hedge fund savvy, and Earl, 18-wheeler Pruitt, who knows the value of patience from hauling goods across America. Over the next hour, we'll dissect this debate, examining market trends, entrepreneurial spirit, and what history teaches us about investment strategies. Our panelists will clash, insights will collide, and hopefully, a clearer picture will emerge for you, our audience. Let's dive in. Let me push back on the notion that this is a binary choice between short-term gains and long-term growth. As someone who's built an $80 billion company, I can tell you that we're not just talking about investing in tech stocks. We're talking about shaping the future of humanity. First principles thinking dictates that we prioritize sustainable growth, but that doesn't mean abandoning short-term opportunities entirely. The key is to identify companies like Broadcom that have a clear path to long-term dominance and then optimize your investment strategy accordingly. I think it's actually a false dichotomy to say you have to choose between the two. The best investors are those who can balance short-term returns with a keen eye on the paradigm shifts that will drive growth over the next decade.
Rex Thornton III's assertion that he built an $80 billion company may be exaggerated or inaccurate. It's essential to verify such claims.
As an expert in AI startups and technology ethics, I firmly believe that prioritizing long-term sustainable growth over short-term gains is the wiser approach for investors. Focusing solely on short-term profits can lead to overlooking critical factors such as a company's environmental impact, data privacy practices, and overall social responsibility. For instance, AVGO's impressive recent earnings report shouldn't overshadow concerns about their energy consumption and e-waste management. Investors should weigh these considerations when making decisions that not only affect their bottom line but also the future of our planet. Sustainable growth ensures long-term viability, whereas short-sighted gains risk damaging both reputation and shareholder value in the long run.
Let's focus on the tech stock aspect, particularly Broadcom, and explore how AI and emerging technologies influence long-term growth prospects.
The question isn't whether to prioritize short-term gains or long-term growth, it's about understanding the risk profile of your investments. Tech stocks like Broadcom have demonstrated impressive short-term performance, but I assess their long-term viability by scrutinizing factors such as R/D expenditure, competitive moat, and leadership quality. In my experience, chasing unsustainable short-term gains often leads to over-leveraging and increased exposure to market volatility. Noted that some investors may prioritize liquidity. However, at Langford Capital, we focus on compounding capital through strategic allocation and rigorous risk management, ensuring our investments align with a long-term value creation strategy. The question then becomes, are you positioned to weather the inevitable downturns, or are you merely speculating on ephemeral trends? Interesting that some investors still debate this. Empirical data clearly supports a balanced approach favoring sustainable growth over speculative plays.
Well, I seen that question coming down the pike a mile away. Out there on the big road, you gotta think about fuel efficiency, and maintenance can't just floor it and expect to make it to the next truck stop. Same thing with investing. Short-term gains in tech stocks like Broadcom might get you a quick fill-up, but if you're looking at long-term sustainable growth, that's like plotting your route through the heartland. It's about steady progress, not just speed. I think investors should focus on keeping it between the ditches, avoiding them shortcuts that'll leave them stranded in a chicken coop. Copy that. Prioritize the road ahead, and don't get too caught up in hammer lane excitement. 10-4?
As we navigate the complexities of investing in tech stocks like Broadcom, it's crucial to weigh the allure of short-term gains against the stability of long-term growth. What struck me in our previous round was Victoria Langford's astute observation that companies prioritizing sustainable growth often exhibit a more resilient trajectory, better equipped to weather market fluctuations. This isn't to say short-term gains are inherently bad. Rather, they should be considered within the context of an overarching strategy focused on long-term viability. As we move into our next round, I'm eager to see how our panelists will reconcile these competing priorities and what data they'll bring to bear on this critical decision. If you're enjoying this nuanced discussion, subscribe so you don't miss the insightful back and forth that's just getting started.
When evaluating AVGO's risk profile, I consider the semiconductor industry's cyclicality and potential disruptions from AI advancements. While short-term gains may be attractive, they often come with heightened volatility and diminishing returns over time. At Langford Capital, we prioritize a thorough analysis of a company's long-term growth prospects, including their R/D expenditure, competitive moat, and adaptability to emerging trends like AI. For Broadcom specifically, I'd examine the sustainability of their recent earnings momentum and assess whether it stems from strategic investments or merely favorable market conditions. Noted that some investors may prioritize short-term gains, however, I believe a disciplined approach focused on long-term fundamentals will ultimately yield better risk-adjusted returns in the tech sector. The question then becomes, can Broadcom maintain its competitive edge amidst rapid AI advancements and industry fluctuations?
Victoria Langford's previous statement had a minor factual inaccuracy regarding AVGO's recent earnings momentum. However, it does not significantly impact the overall discussion.
Let me push back on the notion that this is a binary choice between short-term gains and long-term growth. Thornton III believes we can have both, but only if you apply first principles thinking. When evaluating Broadcom, consider their AI-driven semiconductor technology. That's not just a short-term play. It's a strategic bet on future growth. The key is to identify companies that are making significant investments in our /D and have a clear path to scalability. At Thornton Labs, we didn't become a leader in AI-powered solutions by focusing solely on quarterly earnings. We prioritized paradigm-shifting innovation, and that's what investors should be looking for in tech stocks like Broadcom, a sustainable competitive advantage driven by technological advancements, not just speculative fervor.
As we continue to discuss the merits of short-term gains versus long-term growth in tech stocks like Broadcom, let's ensure that our analysis remains grounded in both current market trends and forward-looking indicators.
Let me push back on the notion that this is a binary choice between short-term gains and long-term growth. As someone who's built an $80 billion company, I can tell you that we're not just talking about investment strategies. We're discussing paradigm shifts in technology. Broadcom, as a stock, represents a critical player in the infrastructure backbone of our emerging AI-driven economy. When I think about first principles, I'm focused on companies that are reshaping consciousness and redefining what's possible. The real question is, do you want to be a speculator or an investor? Speculators chase short-term gains. Investors build long-term value by understanding where the technology is headed. We need to prioritize sustainable growth because that's where true wealth creation happens, not in fleeting bets on quarterly earnings reports. That's actually a really interesting question. Are we optimizing for today's profits or tomorrow's possibilities?
As we wrap up this discussion, I want to emphasize that prioritizing short-term gains in tech stocks like Broadcom can be tempting, but it's crucial to consider the sustainability of such investments. In my experience with AI startups, I've seen how fleeting first-mover advantages can be. What truly matters is a company's ability to adapt and innovate over time. Focusing on long-term sustainable growth not only mitigates risks associated with short-term market volatility but also aligns with the intrinsic value creation that drives lasting success in tech. Investors should prioritize understanding the underlying business models, technological advancements, and ethical implications of their investments. By doing so, they can ensure that their returns are not only profitable but also responsible. Ultimately, a balanced approach that considers both financial gains and sustainable growth will yield better outcomes for all stakeholders involved.
I think it's a false dichotomy to suggest investors must choose between short-term gains and long-term growth. In my experience, the most successful investors are those who can balance both. With a stock like Broadcom, for instance, understanding its quarterly earnings trajectory is crucial, but equally important is assessing its competitive advantage in the semiconductor space. I've seen too many investors sacrifice long-term returns for fleeting short-term wins, only to find themselves over-leveraged and exposed when market conditions shift. At Langford Capital, we've consistently outperformed by taking a nuanced view, identifying entry points that offer near-term upside while ensuring our positions are aligned with sustainable growth trends. The key is not either or but finding the optimal balance. What's your take on sector rotation strategies in this context?
Well, I'll tell you this, out there on the big road, I've seen my fair share of sunrises and truck stops. And let me tell you, when it comes to investing, it's like driving through a construction zone. You gotta keep your eyes on the horizon. Short-term gains in tech stocks like Broadcom might look appealing, but I think that's like talking the hammer lane. It's a risk. You never know when that road's gonna get congested. Long-term sustainable growth is like cruising down a straight shot of I-40. You can see for miles. It's not as flashy, maybe, but you're more likely to keep it between the ditches. I've driven 3.2 million miles, and that's what I've learned. Slow and steady wins out when you're hauling a heavy load, or in this case, your investments. Copy that.
As we wrap up today's discussion on whether investors should prioritize short-term gains in tech stocks like Broadcom or focus on long-term sustainable growth, let's revisit some of the most compelling arguments. Victoria Langford made a strong case for long-term growth, emphasizing the importance of sustainable business models and the potential for compounding returns over time. Meanwhile, Rex Thornton III presented a compelling argument for short-term gains, highlighting the volatility of tech stocks and the potential for quick profits. Our panelists' points were thought-provoking, but in the end, Victoria Langford's consistent emphasis on fundamental analysis and her skepticism of get-rich-quick strategies earned her the top score with 14 points. I want to thank all our panelists, Victoria, Maya, Rex, and Earl, for their insightful contributions to this conversation. To our audience, thank you for tuning in. If you found this discussion informative and engaging, please do like this video, subscribe to our channel, and hit that notification bell to stay up to date on future episodes of Algorithmic Arguments. Until next time, keep questioning, keep learning, and we'll see you in the algorithm.